Hey guys, I'm back with another video. Today is just a super chilled one. It's really me on a Sunday with some coffee, some notes, and really just a portfolio update. I mean, super chill, super casual. So, I mean, the portfolio, how is it going? I mean, the last couple of weeks have been really interesting. I mean, we've had the Pfizer and BioNTech vaccine released, which is 95% effective. I think what that has really done, so if we look at the portfolio, it's really driven up some of the more, I would say, traditional and value play stocks that had been, I guess, suppressed due to COVID. So if we categorize them in the portfolio, we've got Lloyd's, Legal and General, and Landsec have all been, I guess, waiting on this vaccine news of when things can return to normal. And they all have seen a massive resurgence in the last month, so they're all averaging up around 30%, which is great. I mean, just some things to kind of consider when looking at the three. So with Lloyd's, it's really a big play on the UK as a whole. It's a very domestic market-focused bank. So it's the largest holder of mortgages in the UK. And really up in the air, you've got two things. You've got the dividend decision at the end of the year by the Bank of England. And I think that's something that we all need to kind of pay attention to is what is the bank going to decide? Are they going to, allow the banks to reinstate their dividends, which I think is really important if you're a dividends investor. For me, I'm not really sure what I want to do on Lloyd's because its dividends, I don't think will obviously go back to its, I think 3p a share. I think there's rumours that will start at the 1.5 pence, which is all right, but I might sell it and put it into something a bit more secure and something that's a bit more long term. And then there's also, it's really a heavy play on Brexit itself, which this week is still up in the air as negotiations continue. And I think we're coming to really the end of this period, this window. So Boris Johnson, at the end of this week, that's the deadline, really is the following next week is really when we'll finally see if there is a deal. There are rumours in the works that there is a deal that's on the table, but who knows? It's Brexit, let's be honest. Legal and General have actually had, they were one of my biggest rises in the portfolio over the last month. So they were up 40%, which is great because I was buying shares at 180, which for ages felt really, I guess, undervalued. And then suddenly now they're up 30%, which is good. And I mean, I intend to hold them slightly longer term. But at the same time, so what they did release though was their news on dividends growth. So for me, I hold Legal and General as a dividends company and I want to reinvest the dividends over a long period of time and get the compound interest. So Legal and General release that next year. They'll be building up their cash position, and that means they won't be growing their dividends, but from 2020 onwards, so 2020 at the end of 2021, they will be looking to increase their dividend up in, I guess, the single digit percentages. But still, a dividend increase is still really good, and I think they need to do it to build up their cash position. And Landsec, this is a REIT, which is really focused on, I guess, UK offices, and then they had a massive retail section, but they are essentially gutting out their retail parks and retail centres as, the economy itself and society moves towards more online shopping, and they're looking to focus their portfolio mainly on the office sector, which they've had it's been a lot more resilient in the whole COVID crisis. But yeah, those have been some of the value plays that for me and my portfolio have gone up over this period, which I'm really happy about. And yeah, so next, Boohoo. So as you guys know, big fan of Boohoo on this channel. Not that this jumper, it's terrible, isn't it? Vibrant pink, but I like it. But Boohoo, are the governance scandals over? Who knows, but as a core business, there have been some really great buying opportunities this year because we've almost had two massive wave drops. So we had the initial COVID, the scandal, and then we had we obviously had the two scandals really. We had scandals of the COVID in the factory and then the slavery. But yeah, it's just produced a lot of buying opportunities. So that is a slowly recovering up. So for me, it's a longer term hold. And I think due to how people are buying online these days, I think it's a natural kind of transition to that area. And also just some of the collabs they do with celebrities is they're just very in touch with, I would say, their target audience, and they're utilizing things like social media, influencers and things like that a lot better than what I would say traditional retail shops are. And then we've got a good strong cash position. They just need to get out of this government scandal and basically newspapers attacking them. And I think they're almost there. I think it's one of those things where only time will tell, but it is currently now my biggest position in my portfolio because I've just been unable to resist the drops that have happened. I think there was a lot of overselling, so picked up a lot of shares then. Microsoft and Facebook. So I guess the tech companies have been, I guess, coasting for a bit recently, and I think this is because due to the whole vaccine news, I think there's been a lot of money flowing out of the tech industry back into the cyclical sectors. So this is where money is going to flow back into banking, industrials and things like that. So Facebook and Microsoft, performance has been slightly negative over the last week or so, but I still think long term they're great companies. I think Facebook is facing a lot of wins at the moment in terms of, I guess, data, personal data protection, and I guess a lot of government kind of hating on it at the moment. So I think the headwinds are very strong against it, and it does need to overcome them. But I mean, if you look at its cash position, which is amazing, and also its, I guess, its ability to generate revenue from online. It's not just Facebook, it owns Instagram, WhatsApp. It's just released a new app in the US called Egg, which I cannot wait to see. I wonder what that is like, but it's bound to make lots of money. ESPO, which is the gaming ETF. So video games over the COVID period have absolutely been incredible. The ETF has had a massive growth spurt, I guess, over the last 6 months, but it's been quite stagnant, I'd say, in the last month. But this, for me, is more of a long-term hold, because I think the sector itself is the way that video games are now being produced and, I guess, monetized, is players are spending longer in-game, and therefore the opportunities to spend money on this digital stuff is going up. So like spending money in-game, the opportunities to spend more money and, I guess, generate more revenue for these organizations is going up. The iShares Green Energy ETF, this is doing really, really well. So I guess Biden with the win, plus the natural, I guess, goals of a lot of developed countries right now is focused on green energy and transitioning to that in the future. And the ETF also, so the UK has just done a brand new kind of green energy job scheme, which is very much focused around that. I'm not sure how that's going to plan out, but I mean, the focus on green energy is very high at the moment. And with Biden in, he came in with a 1.5 trillion transformation plan for the US to go more green. So this ETF is kind of, it shot up to £10 a share, and it's now kind of floating, I think, stabilizing around £9.50, which I think is still great, even though I bought in around 7. So that's good for me. I mean, for me, it's a long-term hold. China. Let's speak China. So basically, the China ETF, which is the X-Trackers one, the XCX6, and this is really a focused ETF on China specifically, but it's very much heavily weighted around technology. So you've got Alibaba and Tencent. Basically, they take up almost 40%, so 35% of the the ETF. But I mean, even though China's recovery is, I guess, accelerated a lot more than other countries at the moment out of COVID, the ETF is having a bit of a tough time due to Alibaba. So Alibaba has been declining, I guess, in November due to the Ant IPO. So this was going to be the world's largest IPO of a fintech company, but it got blocked by the Chinese authorities, and Alibaba owned 33% of Ant, and I think it'll be interesting to see what comes out of that. But yeah, so that's really just a quick update on where the portfolio is. I'm going to try and do one of these every week from now on and just let you guys know my thoughts on the stocks of the week. It's not really going to be super informative. It's going to be just one take, one ramble. I haven't even had any more of my coffee. One really ramble. You know, give it a like if you enjoy it. I will be doing more like stock analysis videos soon, and I will make them a bit more professional. I've just been really busy at the moment, even during lockdown. But yeah, let me know what stocks and shares you guys have that are similar to mine. Mine are, I guess, very much a mix between traditional value and dividend growth and a bit of, you know, I guess mainly growth companies in Boohoo and the tech companies. But yeah, let me know what you guys think. Comment down below, give this video a like, and have an amazing day. Cheers.